Hello and welcome back to the Note. Well, we have the glorious news for many here in the States that the S&P is back through 2100 for the first time since the middle of August. The great fears about China that helped drive that correction appear to have dissipated, at least for now. Now, the biggest new data we have on the economy today comes from the ISM survey, supply manager surveys from around the world. All are handily set so that anything above 50 shows expansion, and anything below 50 shows contraction or recession. And on that basis, you can see that the US and China are actually closer together than they've been for a while, and also that neither of the world's two biggest economies is particularly exciting. The US is now right down on that borderline between expansion and contraction, and China is still below it, even if its latest number is somewhat improved. Bear in mind, these are manufacturing numbers. Services around the world tend to be much healthier. That's a large part of why emerging markets are underperforming so badly, because they are much more reliant on manufacturing. Now, if we take a look at Europe, you see something very interesting, which is, first of all, generally Europe is in better health than either the US or China. Secondly, the big disparity between Germany and the countries that were most afflicted by the Eurozone crisis has largely disappeared. They are much closer bunched together. Also, note well, given that the UK is considering leaving the European Union altogether, the UK at the moment appears to have the healthiest economy of the lot. Plainly, all of this argues, even if there are problems with the euro as a currency, all of this might well argue for Europe to outperform the US over the foreseeable future. Now, one final point on stock markets, which have performed well today outside of Asia. If you take a look at what's happened to the S&P 500 since it was last at 2100, the gains have largely come from tech, by far the strongest sector, led by Microsoft. The sector that has done worst since then has been the very defensive sector, but previously somewhat bubblicious sector of healthcare. This is a rally, make of this what you will, that seems to be driven by optimism for the future about tech, rather than about any new belief in the defensive qualities of companies in healthcare.